Ladies and gentlemen, good day and welcome to SUNTECK Realty's earnings conference call for Q2 FY21. We have with us today Mr. Kamal Khetan, the Chairman and Managing Director of the company, along with the senior management team of SUNTECK comprising of Mr. Manoj Agarwal, Chief Financial Officer, Mr. Prashant Chaubey, Head of Corporate Finance, and Mr. Ronak Rathi, AVP Investor Relations. Please note this call will be for 60 minutes, and for the duration of this conference call, all participants' lines will be in listen-only mode. The conference is being recorded, and a transcript for the same may be put on the website of the company. After the management discussion, there will be an opportunity for you to ask questions. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Before I hand the conference over to the management, I'd like to remind you that certain statements made during the course of the call may not be based on historical information or facts and may be forward-looking statements, including those related to general business statements, plans and strategy of the company, its future financial condition and growth prospects. These forward-looking statements are based on the expectations and projections and may involve a number of risks and uncertainties and other factors that could cause actual results, opportunities, and growth potential to differ materially from those suggested by such statements. I would now like to hand the conference over to Mr. Khetan, Chairman and Managing Director of the company. Thank you, and over to you, sir.
Good evening, everybody, and welcome to the earnings calls for the second quarter and first half of the financial year 2021. Thank you for joining us. Before I share a few updates, I wish you all a very happy Diwali and a very happy New Year. As you all may be aware, we are now seeing a revival in residential demand, especially in MMR, owing to the combination of various favorable factors such as reduction in stamp duty and lower home loan rates. At SUNTECK, we are witnessing an expedited turnaround cycle for purchasing decisions by prospective customers. There is a customer bias towards organized developer, which we see for ready-to-move-in inventory and nearing completion projects. Our luxury projects are also seeing a spike in inquiries, especially on account of, we feel, lower stamp duty. Post-lockdown as well, our digital platform SUNTECK Air continues to garner customer interest and add to our sales momentum. We continue to be agile to adapt to the disruptive changes brought about by the ongoing pandemic and are utilizing this phase to strengthen our systems and processes, including onboarding of Grant Thornton's affiliate Walker, Chandiok and Company as our company auditor. All our under construction sites are now approaching pre-lockdown activity levels, and finishing work is in full swing at few of our projects, which are like Signia, namely Signia Waterfront at Airoli, Gilbert Hill at Andheri West, SUNTECK Westworld in Naigaon. It is also important that we continue to focus on construction progress, which in turn will lead to generate strong cash flows in coming quarters and revenue recognition at regular intervals. The second, the affirmation of AA- credit rating with a stable outlook by ICRA highlights our continued focus on prudent cash flow management. The sales and collection trajectory has been growing post the easing of the lockdown, and we remain confident of increasing our market share. Our recent project additions are the perfect example of a philosophy of making research-based, asset-light, value-added acquisitions. These projects will largely cater to the mid-income to affordable segments, especially post-COVID-19 scenario. We continue to aggressively explore new opportunities and intend to capitalize on these opportunities at hand, setting the stage for further sustainable growth and attractive ROEs. On that note, now I would like to hand over the call to our CFO, Mr. Manoj Agarwal, who will take you through the operational and the financial number for this quarter. As always, I will be happy to answer any of your questions that you may have during the conference call. Thank you. Manoj.
Thank you, sir. Good evening, everyone, and thank you once again for joining us today. Before I begin, I would like to take this opportunity to wish everyone a happy Diwali and a happy New Year. I'll start with update on the revenue recognition method in the financial statements. During this quarter, looking into the current COVID-19 impacted environment, we have moved revenue recognition to project completion method from percentage completion method for all the new as well as upcoming projects, and accordingly comparative numbers have been also reinstated. The same was also concurred by new incoming auditors, Mrs. Grant Thornton's affiliate Walker Chandak and Company LLP, as project completion method for revenue recognition is more conservative. Please note, while cash flow of the project and company remains as it is mere timing difference of revenue accounting. Now, I would like to run you through the financial and business performance numbers for the second quarter and half year of financial year 2021. Pre-sales in Q2 FY21 stood at rupees 200 crore and at rupees 300 crore for half H1 FY21. Distribution mix of quarterly pre-sales remained healthy and are as follows: 56% in Signia High Borivali, 27% in ODC, 16% in Naigaon, and the balance in other projects. On collection front, momentum picked up in this quarter as function of healthy pre-sales of recent past as well as increase in home loan disbursements. We recorded collection of rupees 141 crore in Q2 of FY21, a 117% increase on quarter-on-quarter basis as against rupees 65 crores in Q1 FY21. In terms of financial highlights, we reported a consolidated revenue of rupees 143 crore in Q2 FY21 as against rupees 53 crore in Q1 FY21, a 170% growth on quarter-on-quarter basis, and as against rupees 132 crore in Q2 FY20, a 8% growth of year-on-year basis. Revenue stood at rupees 196 crore for H1 FY21 as against rupees 305 crore in H1 FY20. On the EBITDA front, the consolidated EBITDA for Q2 FY21 is rupees 31 crore as against rupees 13 crore in Q1 FY21. 140% growth on quarter-on-quarter basis. EBITDA for H1 FY21 was rupees 44 crore as against rupees 110 crore for H1 of previous financial year. Our consolidated EBITDA margin for H1 FY21 stands at 22%. With respect to PAT, we recorded rupees 14 crore in Q2 of this financial year as against rupees 28 crore in Q2 of previous year FY20, and rupees 11 crore for H1 FY21 as compared to rupees 61 crore in H1 FY20. Our consolidated PAT margin in H1 FY21 stood at 6%. We continue to focus on our cash flow management and financial discipline, a must in this environment, and that continues to reflect in our low net debt equity ratio, which is 0.25, which exclude quasi-equity component. We can now open the forum for questions from the participants. Thank you very much.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone phone now. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. In the interest of time and fairness to all participants, ladies and gentlemen, please restrict questions to 2 per participant in the initial rounds. If you still have more questions, kindly join the queue afresh. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star 1. We have a first question from the line of Sagar Chalkane from Motilal Oswal. Please go ahead.
Yeah, hi, thanks. Am I audible?
Yes, you're audible.
Yes,
yeah, thanks for this opportunity. Sir, my question was more broad-based on these new integrated comprehensive development control regulations, these ICDCR. what can be the potential upside for us in our lands in Naigaon, Vasai and in Asangao if they are to be implemented the way the draft is right now? If you can highlight something on that.
So, Sagar, good evening. Sagar, it will be very frankly too early to comment what will be the advantage on that. So I would refrain from making any comment on that, very frankly. I don't, because we have to get into detail of every project versus that policy. So once everything is cleared, we would like to get on to that.
Sure, sir, no problem. So I'll come back in the queue for more questions.
So you can ask a second question if you want.
Yeah, no, the next question was on the update on our Oshiwara project only. If you can highlight what steps we are taking to improve the sales velocity in ODC, that would be helpful.
I think
so. Sagar, just wanted to highlight if you see the quarterly performance in SUNTECK City for the last 2 quarters have been very strong. We have been able to achieve significant sales, especially in Avenue 1, which is now ready. OC has been received, and even for Avenue 2, which is nearing completion. As Mr. Khaitan had said, we are also seeing more and more demand in this category of projects. So, SUNTECK City continues to see good momentum for the last few quarters, and we are fairly confident going forward also.
I think we've sold.
We've sold 27 units in this quarter, 26 in First Avenue and 1 in Second Avenue, worth about 54 crores.
In fact, Sagar, in the Prashant Desai, in the entire first half, we have done sales of close to around 90 crores in ODC. So from that perspective, our digital sales platform, which is the SUNTECK Air platform, that has served us quite well, and it has enabled us to, go ahead with the sales momentum. Plus the completion of Avenue 1, as Avenue 1 has received OC, so that is also now giving it another level of growth. So that is something which will also help.
Sure, got that. And just one more thing, any update on the retail or commercial development in that plot?
I think, Sagar, we updated in the last analyst call as well that looking at the current this pandemic going on, it will be too early. We all know what is the state of retail, in fact, in this pandemic situation. So it will be stupid to start any retail project at this juncture. And the commercial, that the clarity is still not there. So we would like to wait and watch that whether there is a demand which comes like residential, like that demand has picked up in residential, that certainty is not there in retail and commercial. If once that is clear, we will definitely look to start I would say as on yesterday basis. But nevertheless, if we see that demand is paused for quite a long time, or there is some problem in the demand of retail or commercial, we can always launch, looking at the residential demand which has picked up, we can always launch a residential tower or a residential phase in that particular component of 3 million square feet.
Okay, so just one thing I wanted to understand. So it is possible that we may not do any retail development in ODC also. Is that what you're saying?
If the market does not allow, why should we do it? If market
right.
just for the heck of it, so we'll do maybe the limited retail. The size of the retail may change. The size of the commercial might change. But if looking at the demand, we would like to see that what kind of demand is there. Accordingly, we have that advantage that we can shift from the commercial, what we were looking to do 3 million square feet of commercial and retail. Maybe we do it 2 million or 1.5 million, but we'll continue to explore. We don't say we'll not do retail or commercial. We'll continue to explore retail and commercial. We'll see what is more beneficial for the company. Obviously, we'll do that.
Sure, understood. I was just asking it from the perspective that it can improve the velocity of sales for our residential units.
I think if you look at that micro market, I think we feel we have done a decent without any launch without any new activation, like on a regular sustainable basis, I think this momentum, what we see over the past years, in fact, this has been better than the previous quarters, even pre-COVID quarters, when there was not a launch. So I think this is quite decent, and we see this momentum continuing, and this will only pick up from here.
Got it. Thanks for those inputs. Very helpful. Thank you, and all the best.
Thank you. To ask a question, participants may press star followed by 1 on your touchtone phone now. We have next question from the line of Murtaza Arsiwala from Kotak Securities. Please go ahead.
Yeah. Hi, sir. Just 2 questions, but one of them on the ODC commercial has been answered. Just want a clarification on the percentage completion, because, the wording in the notes to accounts says certain assets. So I just want to be sure we moved across the board to project completion, or it's selective, that some assets are on percentage completion and some on project. Just want to clarify on that.
So, Murtuza, going forward, obviously all the projects will be on the project completion method, and so the old which are almost nearing completion, or project which are completed or going to complete within next 1 quarter or 2 quarter, obviously there is no point shifting, because substantial amount of profit has been already booked. So we are trying to more conservative method. Obviously,
Sure. And just on the big projects, can you just say which are the ones which are still on percentage completion?
So like Avenue 1 and Avenue 2, which are almost near completion or almost completed, so they are on percentage completion. And the Westworld, which is completed, these are on percentage. But going forward, I said like Maxworld is on project completion, so which is moved from percentage completion to project completion. Anything new we launch, obviously that will go into project completion.
Okay. So whatever is launched in existing inventory, given that it doesn't make much of a difference since the project's already nearing completion, you have not changed.
Yeah.
But going forward, all the new projects will be on project completion.
Yeah.
If that's okay. Thank you so much, sir.
Thanks.
Thank you. Participants are requested to restrict their questions to 2 per participant. We have next question from the line of Parvez Akhtar from Edelweiss Securities. Please go ahead.
Good afternoon, sir, and congratulations for a good performance. Couple of questions from my side. First, how do we see our launch trajectory going ahead? And this quarter we have done pretty well despite it. But going ahead, what kind of projects can we expect to launch in, let's say, next 1 year or so? And second thing is, if you could give us an update on the commercial projects in DC that we need to complete that. Thank you.
Sorry, you're breaking your voice. I think you're taking a call from your mobile phone, so the question is breaking.
I said the first question was about our launch pipeline. What kind of projects can we be getting launched in the next, let's say, 3-4 quarters? And the second is an update on the BKC commercial projects timeline.
Okay, great. So Parvez, so the launch, obviously, the launch pipeline, obviously, we have a lot of projects right now in our hand to launch. We have phase 3 we can do for the Naigaon project. Phase 1 and phase 2 as we have already launched, and we have successfully got a good response. And so we have phase 3 where we can launch. We have a Vasai project which we are looking forward to launch. Then we have Vasin, what we have taken recently, that is we are looking ahead to launch. So these are the few projects, and plus maybe the one more tower in ODC, since we have almost now almost in the verge of almost exhausting quite a lot inventory, almost 2 BHK we have almost exhausted in the 4th Avenue first tower. So we are looking to launch even the 2nd tower. So there are quite a few in pipeline, and you'll see these multiple launches happening very soon. So coming to your second question on the update of the project timeline completion of the BKC commercial projects, I think both are on track. We have already got a CC above the plinth level. There was obviously some delay of 3 to 4 months because the execution was stopped due to the pandemic COVID-19. But now, since the constructions are back to normal almost across all our sites, they are also in the full speed, and we see them to get completed over the next 12 to 15 months. If not 12 to 15, I would put it on a more conservative side, 15 to 18 months.
Sure, sir. Thanks. That's it from my side. I'll come back in the queue for more questions.
Thanks, Parvez. Thanks.
Thank you. Anyone who wishes to ask a question may press star and 1 on your touchtone phone now. We have next question from the line of Dhruv Galada from Aurum Capital. Please go ahead.
Good morning, sir. Are you able to hear me?
Yes, Dhruv.
Yes, sir. So I have two questions. First one being, can you give us a figure for the total value of ready or almost ready inventory?
Yes.
Hello. Hi, Dhruv.
Hello, sir.
Hello.
Hello.
Yeah, Dhruv, the ready inventory across all our ready projects today stands close to 2,200 crores.
Okay, thank you, sir. Thank you for that. I just had another question as well about the total realization potential of the current and future projects in the SUNTEC's pipeline.
So, Dhruv, if I understand you correctly, you are basically trying to understand what is the estimated future sales value potential of the company, right?
Exactly, sir.
Yeah. So, Dhruv, see, what we can share with you right away is that, as Ronak said, that our total estimated operating cash flows from the completed projects is close to 2,200 crores. Then, from our ongoing projects, we are going to realize another 2,000 crores. And from our upcoming projects, we have the potential to realize another close to 4,000 crores. So all in all, you are looking at a total future operating surplus of close to around 8,800 to 9,000 crores. So that is the number basically that we have.
Excluding obviously not the projects which are not launched. Only the projects which we have launched.
Dhruv, can you hear us?
Yes, sir. That's it from my side. Thank you.
Thank you, sir. We have next question from the line of Prem Khurana from Anand Rathi. Participants are restricted to participants are requested to restrict questions to 2 per participant. Mr. Khurana, please go ahead.
Yeah, thank you. Thank you for taking my question. So, 2 questions from my side. So, one was, if you could share your thoughts on what, in terms of when do we expect it to come to the market?
Excuse me, Mr. Prem, you're not audible properly. Can you speak slow and?
Am I audible now?
Yeah, now you're better.
Hello? Is it better? Yeah. No, so my first question was with respect to our recent acquisition, Vasim. If you could share timelines in terms of by when do we expect to have approvals in place and kind of hit the market? And also, I think when you gave us your launch pipeline, I think there was no mention of Andheri West project. So any thoughts there as well, please?
Yeah. Prem, yeah. So Prem, Andheri project, obviously we are not got any approval till now. So I don't want to comment on where we are seeing any delay or any possibility of any due to any other reason. So I think we want to hold to announce on that. I would not like to say that it will be very soon or something. I think whereas you're asking about the Vasim, where we are we have moved fast on the approval side, I think, and you wanted to know the numbers on the Vasim side, I believe.
Yeah, essentially in terms of when do we expect this to launch this next year or a year after that? Because the presentation says the landowner is responsible for licensing and approval, so I'm not sure if these guys are moving as per your expectation or...
So yes, Parvez, so where we are seeing the landowner is able to get the most of the approval fast, we are talking only about the projects. When I said about the launch project, we are not talking about the launch which can happen after 15 months or 18 months or 2 years. So we are talking only about the projects which we will be able to launch in less than 9 to 12 months. So 8 to 9 months or 9 to 12 months, I would say. So while talking about Vasin, so we are talking Vasin also to launch in less than 9 to 10 months. So all these projects, what we are talking, whether it is Vasin, Vasai, the phase 3 of Naigaon, and well as the tower 2 of the 4th Avenue, the next tower of the 4th Avenue, which we are seeing that the approvals are going at a very advanced stage, and we are looking to launch all these 4 projects in less than 12 months. In the current, these are the pipeline which we can see we can launch next 9 to 12 months.
Prem, regarding the commercials of Vasin, so we are expecting about 1,200 crores to be the top line of the project. Our share is about 80%, which translates to about 950 crores. The project cost we estimated to be about 550 crores. The gross surplus is expected to be 400 crores, which we hope to realize over the project time cycle of about 4 odd years. Those are the commercials for Vasin.
Thank you, Parvez. Prem, sorry.
Thank you. We have next question from the line of Rohan Koshi from New Horizon. Please go ahead.
Hi, Mr. Khaitan. Just had one question. Could you give us some idea on FY22 and 23, what sort of pre-sales target you're setting out for yourself?
Good evening, Rohan. It will be wrong on my part to give you make a forward-looking statement, very frankly, but I can say that it will be, in spite of this pandemic, and as we are seeing the sales are picking up in real estate, especially in residential, I can only say that you will see a good results. You will see good numbers.
Okay, sir. And second question really was on the debt. Where do you see it going from this level over the next couple of years, and what's the plan?
So, Rohan, we are very clear that we have been always very disciplined in terms of debt. In the Sunteck history, to see maximum, we have always tried to restrict our debt to not more than 0.3, 0.35, and whereas not compromising any acquisitions or further growth story. So that is one thing very clear. So we don't see ourselves crossing the debt level of 0.335 like those kind. At the same time, we will continue to aggressively keep doing acquisitions. As you saw in last 2 quarters, we have done already 2 acquisitions, Vasai and Vasin, and there are many more news, God willing, you will be hearing going forward.
Okay, all the very best. Thank you.
Thank you. Thanks.
Thank you. We have next question from the line of Aditya Mehta from ZM Investments. Please go ahead.
Yeah, thank you for the opportunity, sir. So my question is on Vasin project. We have acquired 50 acres of land over there, am I right?
Yes.
And this around 50 acres of land was acquired in Vasai also. But the developer area in Vasin is quite less, approximately half of that in Vasai. So could you please explain how that works out?
So Aditya, obviously there is a FSI difference. Obviously, how much you can construct in Vasai is obviously much more than if the same 50 acres in Mumbai would construct much more than what we are constructing in Vasai. And like Vasai, we construct much more than what we will be constructing in Vasin. So it's local authority norms. Obviously, we can't construct more than what is allowed, what FSI is allowed. So it is because of that. The difference is because of that.
Okay, got it, sir. And my next question is, you mentioned that you have ready plus ongoing plus upcoming inventory of around 9,000 crores, excluding projects which are not launched. So upcoming will obviously include the projects which are not launched by us. So what do you mean to say by that? That it doesn't include not launched projects?
Let Prashant explain that.
So, Aditya, Prashant this side. For upcoming projects, what you have to understand is that upcoming projects are projects where we believe all the approvals are almost in place and we can launch it. So upcoming and there is a difference between upcoming and planned projects. So in our upcoming projects, like we have projects like Maxwell Phase 2, we have the Tower 2 of 4th Avenue, ODC, we have the Vasai project. So these are projects, where the visibility is very, very high from our side. And Tower 1 of 4th Avenue is already launched. So from that perspective, we talk about these projects. And even if you exclude the upcoming projects, still we are sitting on close to around 5,000 crores of operating surplus. So from that perspective, the company is sitting on a solid foundation. Thank you, Aditya.
Thank you. We have next question from the line of Yash Mandavewala from Mandavewala Family Trust. Please go ahead.
Hi, thanks for taking my question. The first question is on the pricing. So have we taken any pricing action this quarter across any of our properties? And if we can also provide some sort of outlook on prices going forward.
So, Yash, there is pricing means, very frankly, we have not given any discount on, we are selling at the same levels as we have been selling. So I don't see there is any problem of pricing, and since the velocity of the sales is good and decent, so we don't see any upward movement of price, whereas the downward revision of the price. But going forward, if this trend continues, we can only see that the prices will be firmer and firmer going forward. That's the trend which is going right now. The way the sales velocity is going, I feel the price is moving only towards north, nowhere else.
Got it. So the sales we've done this quarter, they would be the realization would have been closer to what we did last year or last quarter. There's not been any decline this quarter.
No. I don't see. So we have given the numbers, I think pre-sales numbers in the starting also and the results also, and you can compare that obviously. So in fact, from the last quarter, it has doubled this quarter.
Got it. My next question is on BKC Residential. It's been a few quarters now since we saw a sale there. So any update on that, and what is the feedback that we're receiving there?
Yeah, for last, in fact, 2 quarters, unfortunately, we have not been able to do one deal. So 1 quarter we did one deal, but against that, we had to write back one deal. So, but we are seeing now, because of, in fact, post this COVID-19, we are seeing now very firm inquiries for the BKC projects. Hopefully, we may see something good in coming quarters.
Thank you very much, sir. Ladies and gentlemen, that was the last question. I'd now like to hand the conference over to the Chairman and Managing Director, Mr. Khetan, for closing comments. Over to you, sir.
Thank you all for taking out the time from your busy schedule today. In case if any of your queries have been left unanswered, you can get in touch with me or my team. We look forward to your continued support. Thank you once again for joining us today, and please be safe. Thank you. Thank you once again.
Thank you very much, sir. Ladies and gentlemen, on behalf of SUNTECK Realty, that concludes this conference call. Thank you for joining with us, and you may now disconnect your lines.